happening across multiple things. And
Yes.
don't think we'll get a solution in the first levels. Okay, so I can expect and all my clients to be advised that in Kerala also, please prepare for high court or tribunals.
Yes. In fact, as I said at the start, it may even go to Supreme Court because the TRAN will again open, is what is my feeling.
If see, I am still not happy with this ad solution, because even if I get a TRAN reopening, the amount of credit which I can salvage as TRAN is not proportional to the liability that I am going to accrue.
Agreed.
Because see, first of all, the nature of the industry for which this liability is getting passed on has no correlation with the actual rate of tax that was subsequently established. I'll get somewhere around 6 to 7% as strand benefits, whereas I am expected to shell out 12%. At the same time, I have to take a project ITC for which most of the industry did not have any inputs to claim back on as transitional provision, except the tax that they've already paid. So I have no idea how they thought about this provision in the first place. I first of all, I don't agree to 142.11c in the principle itself. Once levy has already been there in the previous VAT tax or the service tax provisions, there should not have been any case to bring it again into supply. Time of supply should have ended then and there itself.
Puneet, this is one of the interesting points that was brought up by Mr. Haldia sir in the last meeting we had, wherein he brought in 50 subsection 1 into this contention.
Okay.
I mean, now that we have started, I will complete that part and then we will get back to the provisions discussion. Wherein 50 subsection 1 says the supply details which were reported in that month's return, that is when you use ITC, you don't have to pay by interest on that. If there is a delay, cash portion only, you need to pay interest. Now, what it says is supply. Now, tax paid on advance, is it supply?
Tax paid on advance is supply. Yes, in my opinion, it is, because supply has agreeing to provide service or agreeing to provide goods also in the inclusive definition. So it is supply in my view.
Correct. If that is the view, now I want to travel to 54 subsection 8, wherein it says the 5 situations where the tax will be refunded directly to the assessee's account, will not go through the check of unjust enrichment. In that, if you see 54.8e, 8c, I believe, if you see that, it will mention where there is no supply that has happened in the transaction. But tax has been remitted. Now, why would that arise? Or what would be the possible scenario where that can arise? My view all along has been that when, as a works contractor, I take an advance, I pay tax. Maybe I am a person who is into marriage hall renting or hotel pre-booking. I get the money, I pay the GST, but I pay the GST as a person who is receiving advance. Subsequently, it so happens, as it happened in the case of COVID, everything is coming to a standstill. This money needs to be refunded. I refund along with GST. Now I go under 54.8c and say, supply has not happened. Give me my money back. If I say that, then I will have to directly counter your point of saying paying tax or advance is not on account of supply. Paying tax on advance is only a collection mechanism at the earliest by the department, constituted under 13.3. But it is
have my doubts and I do not agree to that.
No, that is why I said I will put forth my point. We will agree to disagree. But this is how I had even managed to get a refund in case of one of the suppliers to Sterlite Industries in Tamil Nadu. The works contract happened and 2018, the gun shoot and all that happened. The project could not take off. They had paid huge tax on the advance money received under GST. I invoked 54.8c, got the money refunded because we paid the tax as advance, tax on advance.
In pre-GST period, I have to forcibly agree with your point, because there are multiple decisions which follow your proposition. For example, I can quote that advertising company's decision of Gujarat High Court, which said that unless no service is provided, it is not at all a service. So levy doesn't exist. So in all those cases, even the limitation under 11B was not to be applied, and even afterwards, the tax was sought to be refunded, because it is ultimately said to be not a tax at all. So pre-GST, I think I have to concede to that point. But in GST, because of the wide and exhaustive definition of, inclusive definition of 7.1, I have to say even the agreed to service has to be treated as supply, and it has to have the nature of tax.
Okay.
Anyway, let us have a discussion further when we reach 54.8 at the time. Now we are in 11, 12, and 13. So good morning, everybody. It's already 9:11. Sorry to take up 10 minutes of your time. Let's continue with the time of supply provision, as Shankar sir has been duly explaining.
So good morning all. As we do generally in our group also, there is a discussion, and discussion goes for long. Now we will come back to the time of supply provisions from where I left a couple of weeks back. So we were discussing on the reverse charge element in case of services. That is where I had made a pause. Now, the reverse charge in case of services is a unique GST proposition, which is also having a traces of what was there in the point of taxation rules, which was there erstwhile in the service tax regime. Reverse charge, now it would have gained a lot of momentum, and the questions would have been raised for the simple reason that audits are happening for the earlier periods. When it comes to services related reverse charge, the tax liability, how does it get fixed, or when is the liability to pay the tax gets fixed, is straightforward. The date of receipt of payment, or from the date of invoice, the day following the 60th day. In simple terms, we can say the 61st day from the date of invoice needs to be compared. Out of these two, whichever is earlier will attract our time of supply under 13.3 for the purpose of payment of liability. So this will look a very simple provision from the point of view of 13.3. But now I want to fix this to 9.4, which has become the main bone of contention for 17.18. Now 17.18 under 9 subsection 4, 13th October 2017 onwards, the limit of 5,000 was extended for all the transactions, which meant 9 subsection 4 was effectively rendered not liable up until 1st of April 2019. And then 1st of April 2019, 9.4 was modified in such a way that it was made applicable only to real estate industry. Now, what was happening in that intermittent period, or for the period, in other words, 1st July to 12th October 2017, for this 100 or 102 days, what is the problem that we are facing with the officers now is they are taking all the unregistered person supplies during this period, and inward supplies, that is, and they are saying you need to pay RCM on that. Where it becomes a point of contention from time of supply perspective is, assume I have received a goods from an unregistered person on 1st September 2017. I have never made payment to him up until 1st of say November. Now the time of supply itself would take it to 60 days, the day following the 60th day, which means I have to start from 1st of September, add 60 days, and then add 1 day to arrive at my time of supply, since I have not made payment in the meantime. By the time time of supply gets invoked, already the government has come up with a proposal to say that I don't have to pay RCM. If this is strictly implemented, I think somewhere starting with August 13th or 14th, for our ease of understanding or remembrance, we will keep August 15th as the cutoff date. Any unregistered person inward supplies for which I have not made any payment within 60 days, starting from August 15th till October 13th, will also enjoy this exception. Is the correlatable answer that I could get from 13.3 for one of the scenarios. So 13.3 plain reading is different. Where I can fit it in a scenario is one. And the second scenario that I want to bring about with respect to the reverse charge of services is the second proviso. The second proviso talks about import of services from associated enterprise, or provided where the case of supply by associated enterprise, where the supplier of service is located outside India, the time of supply shall be the date of entry. Now, this is where two parts. One, it is import of service. Where is it mentioned? It is mentioned as supplier is outside India. When supplier is outside India, how can the transaction become taxable in India? Only when it gets covered under 2 subsection 11 of IGST Act by calling it as import of service. The three elements required for import of services: supplier outside, recipient inside, and place of supply should be in India. If that is all satisfied, this RCM that I need to pay on import of services. Okay. Now the second part is, what is the time of supply? For this, they are not resorting to the first part of 13.3. They are saying the date of entry in the books of accounts of the recipient, or the date of payment, whichever is earlier. Now here, I want to draw a parallel between the corresponding provision that was existing in Rule 7 of point of taxation rules in the erstwhile service tax regime, wherein the distinct difference that I can see, maybe something is lost in transit, is that in service tax, they used to mention date of debit in the books of accounts of the recipient of the supply or recipient of the service or the date of payment. Whereas in GST, they have not used the word date of debit. They have just mentioned date of entry in the books of accounts. So in what way it makes a big difference? It does make a big difference in case of organizations which are multinational companies. Take, for instance, I have a foreign holding company which closes accounts by 31st of December. Now, I am a person sitting in India. I close my accounts by 31st of March. Now, 31st of December, my foreign company will say, give me the accounts I need to consolidate. I will make a provision entry for royalty. I will make a provision entry for the royalty either on manufacturing or brand royalty or guarantee fees. On all these, I will make a provision on 31st of December. Now, GST says you have made an entry in the books of accounts, come and pay GST, RCM. Whereas the erstwhile service tax provisions clearly said it is debit in the books of accounts. When I make a provision, I only credit you. Only when I make a payment or only when I make an offset against the liability that I had created earlier, I will do a debit. So we were all clear in the service tax regime that only when I make a payment or only when I adjust that liability, the time of supply will arise in case of import of services, but not so in GST. Even making an innocuous provision on a monthly basis gives rise to a time of supply because the wording used is date of entry in the books of accounts and not date of debit in the books of accounts. Many cases, this has led to further issues, especially in audit and the departmental proceedings in terms of inspection. So these are two critical things I wanted to bring about with respect to RCM on services. Now, the next element, the vouchers. The most,
Sir, I would like to ask one question in this regard.
Please.
Can I ask?
Yeah, please go ahead.
Basically, what will happen for deemed supply? So recently, they have this corporate guarantee where there is no entry in the books of accounts, but now they want to create liability in the books of accounts. So what will be the time of supply for import? Basically, when a holding company gives the corporate guarantee to companies in India, and now they need to pay RCM. RCM was there earlier, but now the rate has been defined. And if they don't make any entries, because this is just a note in the books of accounts, annual account, and there is no financial entry. So what will be the time of supply? We have taken a view that as per the proviso, since there is no book entry at the time year end, or will create a liability. So what is your view on that?
Okay, I will drill down to the question from my perspective, sir. I am first assuming that it is with respect to a financial guarantee only. That is guarantee given to a financial institution. Because many a times, what we tend to see is the foreign entity gives guarantee only to the customers. Now, that guarantee does not come under reverse charge.
Yeah, bank guarantee, we can say bank guarantee for loans.
If it is going to be a bank guarantee, agreed. So I'm just trying to bring both of us understanding the same page. So yes, it is bank guarantee given by my foreign entity, but for which I do not pay them anything. Then there is no entry in the books of accounts per se. My view is that in a related party transaction, are we supposed to disclose it as guarantee given on behalf of me from a financial perspective?
Yes.
The answer is yes. When I do that, I will assume that that related party transaction for which there is a disclosure given, at least on a yearly basis, I will say it has to be done on a yearly basis. Now, this does not have any legal backing. All I am doing is using my little knowledge of accounting standard being pulled into GST. That's all to create a rational. But straightforward answer to this question, when there is no entry in the books of accounts and still an RCM arises, am I liable to pay? Or which is the time of supply? There is no answer, sir.
Okay. Because we have taken the view that since we will pay as per as and when we are going to discharge the liability. So basically, we want to avoid the interest in domestic such type of transaction. We need to pay GST as and when event trigger 60 days, or because the corporate guarantee is a continuous service. So in that case, we are paying GST, but for international transaction, we are of the opinion that we can resort to this proviso and take shelter of that and pay liability as per our convenience or to avoid interest. We cannot they cannot charge interest on that. That's what we believe.
Yes, sir. The first part is what you said. We can take cover under this proviso. One, and second thing, as you touched upon, am I liable to pay on a yearly basis? No, that is also something which I am not in agreement to. Whenever
No,
the
that is one time.
trigger action happens, that is when I am liable to pay. Is what I am of the view, sir.
Yeah, that is one time. We also believe that is one time only.
Yeah.
We don't say that is annual.
Done. Okay, sir. I'll continue.
Okay.
Yeah.
Yeah. Thank you.
Now, the next part, as I was saying, talking about the time of supply in case of vouchers.
Before moving on to vouchers, one more question.
Please.
Practically, we have all these time of supplies for goods as well as services with respect to reverse charge. But from an accountant's point of view, strictly from accounting, this is a quite tricky scenario as we have to look into when the time of supply triggers, and it is not exactly mirroring our mercantile system of accounting. So in many institutions, I've seen people booking reverse charge liability the moment the expenditure is actually booked, irrespective of what the actual time of supply is, create a liability and pay it off in that month's 3B. And take credit in the next month. So it matches perfectly with the double entry system. It matches the GL perfectly. But there might be cases where the liability would have been paid off even prior to the time of supply actually triggering.
Yes.
I hope you understood the question.
100%. Yes.
Yeah. In these cases, whether non-following the time of supply, when the liability has been paid even prior to the time of supply, will it hit the same issue that you spoken earlier? The supply is not yet there. Did I pay the correct tax, or was whatever I paid tax or merely an excess payment?
Okay. You mean to say the payment made before time of supply?
Yes, because let us take an example of a 9-4 case in July 2017. It is an unregistered purchase of goods or services. I booked it in my GL as unregistered purchase. Even though I have yet to receive the goods, even though I yet to make the payment. So the time of supply is yet to trigger. However, due to dual entry system, I've made the expenditure booking as it is expected in the current month, and I made a provision. And based on that, I made a RCM payment in my 3B. And only in the subsequent month, does the actual conditions as per 12 or 13 trigger. In this case, what would be your answer?
I would still take refuge under two things. 31 is where initially I was wondering whether it is actually a tax liability at all, whether there is a levy at all. But then 13.3 explanation has already, or 13.2 explanation has already made it clear. When an invoice is raised, to that extent, the service is deemed to be completed for the purpose of section 13.2. So I will take refuge under the same thing and say, when my supplier has given an invoice, because RCM can arise in two scenarios.
Yes.
One is when my supplier is registered, when my supplier is unregistered also.
Okay.
In that case, I will take the first scenario. When my supplier is registered, he is raising an invoice for the service that is rendered.
Okay.
We are sticking to services. I will also talk about goods, because goods anyway says that on or before removal, it can be raised. So that way, goods is covered is what I feel.
Okay.
Focusing only on services, the moment my supplier raises an invoice, let's say, for example, even a legal firm is registered, they raise an invoice, it is deemed to be completed to that extent. They upload it in their GSTR1. Then the time of supply has already triggered. Okay. So when I make payment for that, it could be even before the 60 days spoken about in 13.3. I would still say I am well within the levy. This is one scenario. The second scenario, when it is received from an unregistered person, 31.3F is asking me to raise a self-invoice.
Yes.
And whenever I am booking it in my books of accounts, since I raise a self-invoice, they are also taking refuge under 31. I am assuming that to that extent, the service has been received. And this gentleman wants to pay moment he has raised a self-invoice.
Okay.
And making payment according to the self-invoice would also attract the levy, and irrespective of the time of supply is what I feel.
So if this is the way it can be interpreted, what is the reason why there is so much complexity in 12.3 and 13.3? They could have simply used the same logic for associated enterprises for import of service for all manner of RCM. Whenever you make a provision in the books, pay the RCM.
That is one key thing I feel.
Because it will gel well with the 99% of business who follow mercantile system of accounting.
Agreed. But there are two different kind of people who do accounting in India. You and me know better. People start accounting for the financial year only from April. I'm not talking about this April, next April, or only in September when they come to our office. Now, those are the people I'm surprised to know are the largest contributors to GST. The last year when they published the kind of people who contribute, that is the nature of person. I was surprised to see individuals and partnership are the highest contributors to the GST revenue as against the corporates. Maybe it is due to the FMCG and the last leg of the supply chain. I'm not sure. But when it comes to the international transactions, mainly it is only corporates, or I can say confidently only corporates. Maybe some LLPs, whom we can also call as corporates. For them, there is a separate provision which makes them mandatory to maintain books of accounts. Now, the other people, by and large, get governed by income tax. For them, the books of accounts, I'm not sure because I do not practice income tax at all. So I'm not sure whether it is actually expecting those level of documents that are required to be maintained there also. Hence, what was created in service tax as a makeshift provision to ensure that this RCM is being properly collected was continued in GST. Maybe it needs a review. Now that everybody in GST is expected to maintain certain books of accounts, they can look at it and review this provision and say, we will go by entry in the books. Because when nothing is possible, they have gone by the date of entry in the books of accounts only, which is called the last resort.
Yes.
13.5 and 12.5. Why resort it as a last resort? Why not do it in the first place itself? Or keep it as a start and end is a thought process which we can start. Why this was brought out in the first place is where I can go back and see. In service tax, they were worried about the huge chunk of revenue which was escaping their assessment just because these people were only showing it as provision and were never making payment.
Okay.
That is where it got triggered. All the initial days of service tax, I would say initial days of post-SENVAT, that is 2001-4 onwards, where the lot of payments were made. That is when slowly the R&D cess was given as a deduction in such import of services. Many such last-minute changes were made or afterthought changes were made. That provision is being continued, is what I feel. It requires a revisit. Agreed.
Sir, one point I want to discuss. Can I come? Yeah.
Please go ahead.
Sir, in case we were discussing about the provision created for services, I missed one point. Are you saying that tax will be required to pay when the entry in the expenditure is debited?
It mentions date of entry in the book, sir. Are you able to deduce from this which entry, debit or credit?
It says, sir,
as you can see in the screen, moment, I'll highlight it also.
Yeah. Sir, this proviso is applicable only when A and B is not applicable, right?
No, sir. This proviso is when the RCM is triggering on account of a transaction between associated enterprises.
Right. And if it is not an associated enterprise,
then this will not apply. 100% agreed. I am talking only about associated enterprise. This proviso, how it will get triggered.
Okay, sir. That point I missed because I was confused. In case of normal entity, why we are saying that debit in case of debit and expenditure also it will get triggered. Right?
Agreed. No, not that case. Right. It is only in case of associated enterprise, because in case of non-associated enterprise, department always has a fallback, which is 15CA, 15CB. You would have paid for the services in foreign currency. The place where it doesn't get paid, but still services are received without the knowledge of the department is associated enterprises, where they will offset the books of accounts.
Correct, sir. Correct.
For them only this was brought about in service tax, continued in GST.
All right, sir. Yes, sir. Got it, sir.
Yeah.
Please continue. Yeah.
Okay. Now I think finally we'll venture into vouchers. Vouchers, which recently created some amount of momentum. I think Madras High Court also had a case on that. By and large, what the basic provision of vouchers talk about is voucher taxable, or the time of supply arises at the time of voucher, where the critical question. Now, voucher is considered to be a instrument through which something can be purchased, and what can be purchased through that voucher happens to be a identifiable product. Then the tax liability will arise the moment the voucher is sold. In other words, the purchasing of voucher by paying money is considered to be an advance transaction. An advance is being paid, where I know very well that what I am going to buy out of this. Hence, pay tax on advance. The same logic is pulled into 13.4 and 12.4, both the cases. And interestingly, in case of 12.4, the original discussion we had with respect to goods being excluded from the advance net. That is, whenever you receive advance for goods, you don't have to pay GST. The notification number 66/2017, sometime in November 2017 was given. It was only talking about 12.2, in fact 12.2A to be specific. It was not talking anything about 12.4. So what as it stands today is that when I pay money to buy a voucher, and with that voucher, what am I going to buy is already known or very clear, written in the voucher. When I know what I'm going to buy, the tax rate is also ascertainable. If that is the case, even in case of those goods, the moment the voucher is sold, tax is liable to be paid. I'll give an example which can maybe convey my point better. I want to give a gift to my friend who's getting married. I go to the jewelry and buy a jewel voucher. With that jewel voucher, I know very well that he can buy only a jewelry. Now, I am being very specific. He cannot buy a watch. He cannot buy a painting. He cannot buy anything that is being also sold in the jewelry. He can buy only a jewel, is what is written in that voucher. Then, the moment the voucher is purchased, the 3% tax that is applicable on the jewel needs to be paid by the jeweler. So, tax on advances received for goods, is it completely done away? I'm not sure. It is not done away. 12.4 still indirectly has a hand on it. This is with respect to purchase of voucher when I know what can be purchased with that. But when I do not know or what can be purchased with that is multiple things. For example, the same scenario where I am going to my friend's marriage, I'm giving him a 10,000 rupees gift voucher of a supermarket or of a mall, where he can step into any shop. He could buy electronic items, he could buy books, he could even buy groceries. But that voucher I have purchased, I have given it to him. Now, when I am purchasing the voucher, there is no need for me to pay any GST. Or the person who is selling the voucher need not pay any GST. Only at the time of redemption of that voucher, when it is being given, that time, how it will be done? I mean, being accountants, we will always be looking at how it will be done. How it will be done is the basic value of the product plus GST will be charged, and from that tax inclusive value, the voucher value will be deducted. Now, that is how it will be accounted for, and that is how the second possibility arises in case of vouchers. So, only in the first possibility, moment voucher is sold, GST becomes liable. In the second scenario, at the time of issue of voucher, there is no taxability. It becomes a problem, or it becomes taxable only when the actual supply happens. Against that, the voucher is given as a mode of payment. Now, this is the basic of the voucher related transaction. Now, here, where I found a problem or an issue coming up is, there are vouchers given by these organizations. Say, for example, the same jewelry. They are giving, the jewelry is giving a voucher and say you can buy anything in the jewelry. So, it could be a silver article, which is in the form of a, let's say, a cup and saucer. So it could be 12%, 18%, or I can even buy a gold plated painting, which can be 18%, or a watch. So they're just given a mere voucher and said, you can buy anything in the shop worth 10,000. But it has to be redeemed within 6 months. My friend to whom I have gifted this has forgotten about this, or it got misplaced. Post 6 months, what happens? Is the key question. Post 6 months, the voucher is neither going to be given to the jewelry for redemption, and is the jewelry liable to pay GST? Now, this is the question I thought I should get your views on first before me giving my part of the view. Now, what do you think the jewelry should do? Now that the time limit has expired, 6 months, even if he comes after that, I'm not going to give him any product. And 6 months is over, so he's not going to get a refund also. Should I pay GST on this money that I have received? What is your view? As it is a cliche in every session, I am trying to make it interactive. Yeah, go ahead.
In my view, there is no supply, underlying supply. The question of paying GST will not arise in this.
Okay. agreeing to make a supply, sir? Should we harp on that point?
I will not say in that way because this is a classification entry remain. So
Okay.
first you have to pass to the supply test, then only go for a classification. And I have another query on time of supply with respect to book entry. So I will take it in a later after this question.
Okay. Fine. I'll continue. My view on this matter is that it is the transaction which is aptly that can be fit, that can get fit into the question of agreeing to make a supply. Drawing a parallel, I want to start with insurance, where an insurance contract is for 1 year. We pay the premium, nothing happens. But at the end of the 1 year, the insurance expires. We need to go into a renewal or do something else. But we cannot get the money back, neither nor the transaction which was supposed to happen has happened. But still, on the money received, the insurance company is liable to pay GST. I feel the same way. The money is received by them. There is no tax liability that has occurred, meaning the transaction attracting supply has not occurred. Then this money received and forfeited is actually in the nature of agreeing to make a supply, and they are liable to pay GST on this. Under which category? I feel
slightly different view. My view, we cannot
Yes, sir.
compare insurance services.
Yeah.
Insurance services itself is a risk-taking activity, which the service which they are providing. So that is a period of the service. 1 year is the period of the service. And the way I take a insurance policy, my services are getting supplied. So the only
Your services
period
are
has
supplied
been
in what manner, sir?
so risk-taking supply. I have
You are
taken
covering
your
the
risk.
risk.
That is my
Correct, sir?
supply. Covering the risk.
Covering the
That's
risk.
it.
Yeah, same way. Here
Assuming
also.
for the even if here there is no question of risk taking because
No.
he has
You
a
are
capacity to buy.
Okay, sir. You are talking about risk cover being risk cover. No, I'm not talking. This is also risk cover. What I am saying is, there a person has taken money from you, telling you that if there is something that happens to you, there is an event that occurs, I will come and indemnify. Come to
So
this
that's what
transaction.
I'm trying to say. That
Yeah.
is my service. Indemnification is my service.
Correct.
Here, what I'm saying, I have given you 2,000 rupees as a cash as a deposit.
Yeah.
You can apportion as and when you buy the product or services. If you don't buy your product or services, it is a forfeiture of deposit. That
Correct,
would
sir.
I would say. And whether a forfeiture of a deposit can be considered as a consideration for the provision of supply of services, I am of the view it is not.
Okay.
We
You
can always
started with
debate
the
on that one.
deposit. Now, is it a deposit is the key question. I do not completely agree to the view that it is a deposit. It is not a deposit. It was not intended to be made as a deposit. It was given as an advance.
Agreed.
Only,
I also say the same way. It is not
Yeah.
a deposit. I'm just trying to do an analogy of that.
yeah, what I am
When
thinking
you do
is,
analogy on insurance, I would do analogy on a deposit.
exactly, I am
That's
saying it is a money that is given with an idea to make it into a transaction. It did not fructify into a transaction. Now that money received, shall I say that it is not coming under GST? If this is going to be the case, I pay my landlord 10 months rent. I overstay for 5 months. I tell him, you give me only 5 months rent back. The remaining 5 months rent is forfeiture of my deposit. Will this escape GST? I leave that to you for your thought process. So, forfeiture of deposit, will it tantamount to supply? Is the question that you asked. I have given the example of a landlord. Now, continuing with my issue, this is where I feel we are also liable to pay GST on the money that is forfeited. So, people who are issuing vouchers, who think that at the time of issue of voucher, they don't have a problem. Yes, they don't have a GST liability. But when the time limit expires, or all those unreturned vouchers can result in an issue. I think we have time for one more discussion on the provisions. Yes, Arupji, can we continue?
Yeah, sir, Arup sir, I think is not here. Yes, we can continue.
Yeah, okay. So,
Sir, I have one question on the time of supply.
Go ahead.
With respect to associated enterprises, what we were discussing, the similar question would arise in case of a Schedule 1 transaction where there is no consideration is payable. How to tax of liability will arise, and when we say it's taxable event is not defined, the levy fail. But the similar question was placed before the Honorable Supreme Court in case of Mohit Minerals, where the service provider located outside India, service receiver was located outside India, and I were nowhere connected with that transaction. But Supreme Court said कि in a residual category, it will consider as a time of supply. So I am still failed to understand how residual transaction reverse charge liability fit into the residual transaction entry. So if you can throw some light on that part, it will be great.
Sir, I'm not able to completely get your question. You said it is the Schedule 1 transaction.
So there is no consideration. There is no entry in a books
Understood.
of account.
Understood.
So we have not made any entry in books of account. So how to trigger the liability? So same thing was in a Mohit Minerals. Then the ocean freight was paid by the service provider located outside, service receiver located outside India, service provider located outside India. But Supreme Court said there is a provision in a residual category under Section 30. So you take the time of supply will be decided according to that entry. But if I read that entry, how RCM transaction or Schedule 1 transaction fit into that, I'm still failed to understand. Can you just elaborate on that part?
That is something which Mr. Taranga, I think, asked a few minutes back, where we also had a discussion. In case of transactions where there is no consideration that is transpiring between the two of the parties, but it comes under the category of the Schedule 1, which is the deemed supply transactions. And in that, more specifically, for 13.3 second proviso, associated enterprises situated outside India, where does the trigger event happen? That is when we should identify the time of supply, or that is when we should consider it as time of supply. And that event, we should make the tax payment, or that event we should make the accrual of liability. So we will not be booking any entry in the books of accounts for the purpose of expenditure, but for the purpose of GST, when we make the entry in the books of accounts, we have to make it when the trigger event happens. The example that we discussed was bank guarantee given by a foreign located holding company for the Indian organization. When the guarantee is given, I know two things happen. One, it is a associated enterprise transaction, and two, it is something which is made taxable specifically from 26 October 2023. So I will make a liability provision in my books and pay the tax.
One more question regarding to Schedule 1. Let us take a domestic transaction of Schedule 1 and not a reverse charge one.
Yeah.
And let us take an example where the underlying Schedule 1 transaction is ideally something that we otherwise call it as a continuous supply of services. But when you look at the actual definition of continuous supply, there is an actual requirement for a payment obligation to be made.
Correct.
233. So in this case, there is no payment obligation at all. So in Schedule 1 transactions, the time of supply, even though which should have been under continuous supply, will always fall under the general clause. Let us say I am a holding company and I am providing free works contract services to my subsidiary company. And there is a written agreement as to how the works contract services is going to be done. But there is no payment obligation. So how do you ascertain the time of supply since there is no payment obligation?
No, you are going through the first part is when I should raise an invoice. Let's look at 31.5.
Am I what if there is no invoice to be raised at all? Because continuous supply doesn't trigger.
Yeah, understood. But you are talking about 233 containing a provision for payment.
Yes.
Wait a moment. Let's check that out. It's not looking at it from that perspective. 233 talks about anything that is done for more than a period of 3 months. So that is what I was having in my mind.
Yes.
Yeah.
With periodic payment obligations. So once you are talking into Schedule 1, 233 will fail. Okay,
then understood. What you are trying to say is, in case of Schedule 1 transactions, there cannot be, where there is, obviously there is no payment, there can never be a continuous supply of service.
Yes. So when will a time of supply for a regular, otherwise continuous supply of service transaction be identified for the purpose of Schedule 1 transaction?
Okay, when there is no obligation to make payment, it is not considered to be continuous supply, then we have to go by the general clause only.
So if for something that I've yet to do for a huge contract, I have to trigger at the initial stage itself, or can I wait for the contract and apply 30 days from that?
No, that applying 30 days is also going to be a challenge is what I feel. Okay, if you look at it like that, that will become a funny scenario, because as long as you continue to be his subsidiary, this transaction might continue, or you continue to be your branch.
Yes.
This is never going to stop. So
It
will
is never
become
going to stop. So how will we arrive at the time of
No,
supply?
that is where I feel the department has taken a very intelligent move in the last year by giving that circular saying, as of now, in case of such transactions, paying of GST is not mandatory.
No, that is only for certain
No,
cross-chargeable
where 28
items.
too.
Not
Yeah, 28 proviso is covered. Yes. Second
22
proviso.
is for the corporate guarantee alone.
No, not just for corporate guarantee.
No,
No,
all the
sorry,
related
22
party
proviso is
transactions.
for only
All
where
the transactions.
manpower costs are concerned. If you are not eligible for the ITC, then there is actually a liability. You cannot escape with nil valuation.
No,
So
that is
that
where
is
I'm
why
coming
I
to.
said works contract.
Yes, I'm coming to that. And in fact, I'm trying to recollect Columbia Asia. What is the time of supply given there? I'm not able to immediately.
The time of supply was not at all questioned in that advanced ruling.
Yes, but they
asked
were talking
for the
only about
transaction.
valuation and how that becomes taxable. Now,
Yes.
if that is the case, they will see if they are made to pay GST. Now, they could have questioned it from a time of supply perspective, because as you rightly said, when there is no payment obligation, the 2 subsection 33 continuous supply itself is not, something which can stand.
No, the entire point is I am trying to use this as one of the ways where we can try to say there is no time of supply and hence the levy fails. That is why I want to see whether we can test it out.
There is no time of supply, hence the levy fails. Levy itself fails. Okay.
That is what I want
Prima
to explore.
facie, I'm agreeing. Prima facie, I agree with you, Uni. I will have to do my research on this specific point, because 2 subsection 33 failing. Then what is the place to go is something which I need to do a research. Maybe I'll do it and come in the next session.
Okay, sir.
But as of now, yes, if time of supply fails, will my levy fail? Yes. Yeah.
Can it not be considered supply?
Please go ahead.
Can it not be considered a supply? Because continuous supply phase, but it is a supply.
It is a supply, sir. But 9 subsection 1 requires.
And supply, and that it is schedule 1 transaction. So it will be squarely covered. So we don't resort to continuous supply. It is supply and schedule 1 transaction. So there will be a levy. How can we carve out that continuous supply is not a supply? It is an extension of supply. So we have to resort to that. The time of payment is an issue, but we cannot say that it fails within the definition of continuous supply, and we don't need to pay GST on that because levy fails. Supply is there, so we have to pay. At what time GST is required to pay? That is an issue for that. We cannot say that is not a supply from holding company to subsidiary or head office to branch office or vice versa. That is my view.
Sir, even if the residue entry fails to catch it explicitly, even the regular time of supply we can argue to have failed. So I am exploring how the residual entry, which is actually curated towards an actual book entry or an actual payment entry, can be adopted into a Schedule 1 transaction, which actually doesn't have a specific time of supply inbuilt into either 12 or 13. So the entire argument I am trying to make is there should have been an explicit provision in 12 or 13.
They have missed out something where Uni wants to make use of it.
There cannot be an implied time of supply. There has to be explicit time of supply provision to capture the Schedule 1 transaction.
So even case of employer-employee transaction, if I am giving some gift to an employee more than 50,000, so actually there won't be any book entry, but that is a single transaction, not a continuous supply. In that case, I am booking the expenses only.
Okay.
In my books of account. So in that case, also there is no such time of supply.
Then it should fail. That is my point.
But that is then
just because there is a Schedule 1 transaction which can deem supply does not automatically mean the ingredients of 9(1) should automatically be satisfied unless they also capture valuation perfectly, they also capture rate perfectly, they also capture time of supply perfectly. So whenever they have failed in time of supply, the entire levy should fail.
Okay.
No, I'm just exploring. I'm trying to see how we can defend cases.
Yeah, that I got your point.
Sir, levy should fail only when there is no supply, sir. When there is supply, how can you say levy should fail?
Correct, ma'am. When should I pay?
Like Govind sir and Ganga sir, there should be absolute clarity on all the limbs of 9-1.
Absolutely agree. Here, there we cannot bring into the artificialness into the levy and try to do a harmonized construction. If levy fails, it fails. But the question which I fail to understand in Mohit Minerals, they said the residual entry will take a help of you. So how residual entry in always can help? That is a question we need to deliberate. What I think.
Okay.
Ideally, they should amend 12 and 13 to accommodate Schedule 1 transactions.
Completely agree. And I guess in Supreme Court has not deliberated much on that part. They simply said it fit into the residually entry and done away with that argument.
Especially the Schedule 1 transactions in, I spoke about it from a international transaction perspective. Even within the country, that needs to be revisited. What we have here is currently only with respect to the tax liabilities which are addressed on a service tax basis copied into GST. But we have got a huge transaction which is the deemed supply transactions not addressed in time of supply. Okay, with that in perspective, I think we will wind up for the day. We will continue from where we left off. I thought I'll be able to complete the residuary and the subsection 6, which we can take it up in the next week. Is it fine, Arupji?
Yeah, sir, yes, we can continue in the next session. I believe there could be a lot of issues that is going to come up once we have thought about the last two discussions put together, especially the time of supply, when it can fail, and all those challenges that we have to ultimately face at the time of audit.
Okay.
And in many cases, if you see, I'm not generalizing, but if you see both the centers as well as states show cause notices, they make it a point in many center definitely, but state most of the cases they don't. But they always put in a structure to the show cause notice where they establish classification, they speak about supply, they speak about valuation, but they never stress time of supply. And that is something we need to explore in the SC and as a thing that they are yet assuming or implying that this has already occurred. So whether the show cause notice can be challenged wherever time of supply allegation has been implied and not specifically brought out, that I'm actually exploring in one of two cases now. So perhaps we need to have more, we should give more importance to time of supply, as it can be a lifesaver.
True. And just adding one more line to what you said, I would start off with the counter to the arguments by the department, starting from classification and then coming to time of supply. They just merely find a difference, and difference is taxable. Taxable as what is never addressed. And then when it has to be addressed.
Yes. So they should start to identify each and every limb of the taxable event, the transaction, the time of supply, the valuation, and then come to our tax liabilities. But most of the show cause notices we are getting in the past 5 years are failing to do that. Probably in tribunals or subsequent stages, the law will get clarified and department will evolve. But till that time, we need to explore each and every limb. And time of supply is one such area where none of us are giving much importance, saying that the other limbs of supply are already satisfied. So let us think about other merits. But time of supply should be given as much importance as to the other provisions. So with that, any questions? I believe we have some time to address any questions on the discussions we have today. If we don't have any questions from the members, we'll call it for it.
Okay, thank you then. Yeah.
Thank you, sir, for addressing the continuous supply of services and the other issues that we have been discussed today. Let us continue with the residual entry, and I believe section 14 is yet to be taken up. So with that, the three important sections of GST will be concluded. Thank you all members for rejoining SMS, and we'll see you next Saturday.
Yeah, thank you.